Hey guys, Taylor coming at you with a quick post-market recap for June 10th, 2025. So here we have 5-minute chart at SPX. We can see that the most of the price action today oscillated around 60.20, which is the top of our transition zone, drunken Taylor range specifically. You can see that our downside of our transition zone, 6,000, almost hit to the penny. Right in the all of the price action was contained within 60.50, which we said was going to be a massive kind of suppressant on the market today. So everything played out as planned this morning. With that, let's get into pre-market prep, how we got those levels, and then what our intraday tools were telling us. Just quickly, if you guys didn't know, we've been doing YouTube lives the past 2 sessions, pre-market 9 a.m. start time, Eastern Standard Time, that is. So if you're looking for somewhere to go to get your pre-market prep, you can check that out. But anyways, getting into our SPX 0DT structure, this is what pre-market structure looked like. Levels available to you at 6:30 in the morning. So right here, the pink is just the implied move from the options market itself. DEX transition zone 6,000 to 6,005. So simply put, what that just means is, above 6,005, that's where the distribution of the speculation in the complex starts to favor the call side. Below 6,000 starts to influence or favor the put side. So again, that's why that 6,000 was a key level on our chart. And then to the upside, our drunken sailor zone specifically, that top side was 60.20. Yes, while the top of the drunken sailor zone is above our DEX transition zone, so we would expect a move higher. Just looking at the distribution of speculation itself, we can see that 60.20 is really that first ledge in the structure where we start to see a significant build in open interest. So simply put, what that means is we're going to need to see but we will need to see, rapid call speculation up and out for us to kind of break through that strike. And that's going to take the form of our intraday volume analysis and our market trend model intraday analysis, just to understand if that upside speculation is building. Right, and then what we're also talking about is, 60.50, this is clear kind of mass speculation in the structure. We can see kind of a significant build as well up to 60.50. So as time passes, we need to quickly be overtaking those strikes and seeing call speculation build out. If not, then all that call speculation that's out of the money is going to kind of weigh down on the market in terms of negative charm is how you can think about that. Right, but definitively, we said that 60.50 was the top side of the structure today. And then again, 60.20 to the upside is kind of that first key level of that we need to break through, and ultimately 6,000 key downside level to hold. And then again, just pairing that up to the price chart itself, again, 6,000, know how we got that, 60.20, know how we got that, 60.50, and then again, price action oscillated around the 60.20 all day, hit that 6,000 to the penny almost. And then again, 60.50 was really never tested. Then from an intraday point of view, a market trend model, again, this is just our trend and momentum model way that we see, real-time buying and selling using tick index today, very flat action. So again, what we were saying, in order to make substantial progress up to 60.50, we do need to see that buying step in. Never really saw that. Yes, we had some pretty big wiggles throughout the session, but nothing sustained at all. Ton of oscillation again around that 60.20 level. So again, on a day like today where we have a ton of oscillation, knowing where those key boundaries are at, we had a lot of success in the community day selling premium around those kind of top side and bottom side levels. And then again, just recapping it today with our vol M, this is our intraday volume analysis, SPX 0DT volume. Call side is the green, put side is the red. What we understand is throughout the session, every 5 minutes, we get the distribution of call and put speculation, find that middle point, which is called a centroid. We plot that. By plotting that, over time, we can understand where the speculation is occurring for the day, whether that be sideways, that be up, that be down. And that gives us 2 benefits. 1, we can understand the character of price action. 2 is all else equal based off of, from the open to any point in time. With that, understanding of what has happened, we can project out where price is likely to go. And I'll show you a better example of that in a second. But again, marrying that with our key levels, if we know that, 60.50 is a key level, 60.40, 60.20 is a key level, we can understand speculation. Then that helps to infer potential trades. So like today is an example, 60.50 key upside level, speculation was nowhere near 60.50. So, we had folks selling premium up there. Put speculation was trending higher all day today. So there really wasn't a risk of a massive downside like liquidation. Yes, we got that, bit of a scare down to 6,000, but again, that was a key level held to the penny. saw no, substantial downside, and I know folks were selling premium below that level as well too. And then on an intraday basis, this is all intraday basis, but from a directional point of view, we can understand that today is likely a chop action. So expecting some kind of trendy move is probably not the right play. So when you're scalping, it should be, you should really rein in your expectations, and especially play within the levels that we give you intraday. And showing you how this tool is useful intraday. Here's an example from 1:40 p.m. Eastern Standard Time. Here we can see, this is what the call speculation has been doing all day. So all else equal, we can project out where those centroids are likely to go throughout the session. And again, price follows where transactions are occurring. Or another way to think about it is price is not going to go where there's not transactions. So again, that's where selling premium really comes into play, using your understanding of structure, those structural levels, coupled with where folks are actually transacting on the day. So again, right, we can understand there's a lid on the market because we're not seeing any upside speculation, and there's not a massive risk of downside because we're not seeing downside speculation either. So this is a way of how you can use this chart intraday in an actionable way to inform your trading decisions. Right, and so with that, recapping this video, you should understand how we got our levels, how those levels interplay with price action today, and then coupling our, market trend model and our intraday volume analysis. Just a very, very simple, straightforward framework. So with that, you guys have a great night. Be on the lookout again, YouTube Live tomorrow morning, 9 a.m. We will go over our full pre-market prep and what to expect for tomorrow, CPI day. So with that, you guys have a great night. Thank you. Bye.